So you get a bull market, a bear market, and then you get a kangaroo market. And that's definitely the market that we're in right now, is the kangaroo market, as you witness the chop back and forth, shaking people in and out of positions. And if you are a trend trader, well, you'll be getting absolutely annihilated in this type of market. If you're a short-term range trader, well, this could be heaven on earth for you, right? So in today's show, we'll have a look at where a major potential bottom could come into play. I have started to see some promising signs, right? It's a little bit more optimistic type of viewpoint, which we can go through today. We've covered all the worst case scenarios over the last couple of weeks. We spoke about when to get risk off in the market. Now we're going to talk about when's a good opportunity to get fully back in, risk on into the market, and when we'll transition away from the kangaroo market back into a full-on bullish swing, right? So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. It was a wild day yesterday, not just for crypto, but for the stock market as well. You can see the divide in amongst all the various different stocks over here. Literally half of them are up, the other half are down. It's absolute turmoil within the markets, and crypto pretty much had been doing exactly the same thing. Weeklies still not looking too great, but the dailies trying to put in a little bit of a higher low. So we'll talk about that in today's show. We got a lot to look at. When will it all end? When will the worst be over? You can never say with absolute certainty, but we can look at some key metrics, some key things that have happened in the past, and I'll show you how close we are to printing those reads once again, right? So just a very quick look at the stock market. The good news over here is that for the most part, since the origin of this bull run, which started around, let's call it this leg up of the bull run, which would have been from about October 2022. Remember, the markets did top in the end of 2021, and this was essentially your crypto bear market. So let's call it this phase of the bull market. That was your bear market for crypto. We're looking at the stock market now. Ever since the origin of that move, FTX lows, your bottom over here in the stock market, and started to rise. It's really ridden this 200-day moving average really, really nicely. And yesterday we had a look at this key points over here, and we said that really don't want to breach below these lows, right? And you can see some of the times you front ran that 200 moving average on the stock market chart at least. So therefore, there is a possibility and a chance that you may see a little bit of a reaction from this zone. If you do come a little bit lower, I would still expect, even sweeping below this, that support will be found, right? So even if you see the stock market do something like this, I'd expect it to quickly get brought up and prices to close back above. And I'd expect this 200 moving average to, at the very, very least, create a bit of a relief rally within the stock market, which should bode really, really nicely for the crypto market, since they do essentially trade about 1-to-1, right? I was having a look at the yesterday. I was looking at the S&P 500 on the 5-minute time frame, and I put 2 panels over there with Bitcoin on the other side during the US market open. And it's literally 1-for-1. Every tick down that you get in the stock market, Bitcoin does exactly the same thing, right? So they are trading in unison. Therefore, if the stock market's going to put in a bit of a relief rally at the least, right, it could easily go all the way up and continue with higher highs, meaning this would have been a big shakeout, which we have seen, a couple of times throughout this bull run over here. The point is that you can expect a little bit of short-term relief, right? The crypto markets, of course, just move at a much higher magnitude than what you're seeing with the stock market do. So keep that in the back of your mind. You're seeing QQQ really looking pretty similar, right? Ever since the bottom over there, it's really ridden this 200-week or the 200-day moving average towards the upside, the orange line over there. And now you find yourself pretty much finding major support right there at that exact zone. Let's have a look at the Dow Jones. Dow Jones, this one's been front run ever so slightly, but nevertheless, it's got pretty close to that level. Let's see MicroStrategy finding support right there at the 200-day moving average. So that's food for thought. Pretty interesting over there. And then we have Coinbase as well. This has lost the 200-day moving average, but it has found support in this upsloping trend line, right? Another one that we had been looking at, which we started to scale into positions into, was at the fair value gap over here in Tesla, right? That's a Tesla trade coming into the mid-range. If you're viewing your overall range over here, range high, mid-range, and range low. So a lot of you already took the trade over there. I would continue to hold this position if you are in the trade. If you're not in the trade, you can get $175 for free, and you can take this trade alongside me. If you look in the link in the description below over here, it will tell you BTCC, right? Click that exact link. This qualifies you for the $175. You deposit $200. You don't have to use it. You get the $175 free, which you can use, right? So $200 deposit, get the $175, and then you can take that same trade with us, right? So if you do want to trade other things like Coinbase, this is listed over here as well. So I think Coinbase coming into a really, really nice area over here. And if the stock market were to bounce and Coinbase held this range high level, which is also coming into the futures gap over there, you can see price gap towards the upside. You're coming back to fill that. This is the same thing as Bitcoin having come down into that I think it was the $78,000 region to fill that CME futures gap. Well, Coinbase is doing the same thing, right? So you can actually take this Coinbase trade right over here on BTCC, and you don't have to use that complicated MetaTrader 5 platform that the traditional market traders use, but you get your crypto native friendly usual leverage slider, just the same look and feel for what you guys are used to, right? So have a look at that over there. Various different crypto stocks and commodities all over here on BTCC. So gold is another one. We should look at gold. We'll bring that up maybe sometime tomorrow. Let's actually just click on it over here very, very quickly. Okay, gold still floating up on the daily. Let's just quickly have a look on the weekly chart. We spoke about gold is coming onto a TD sequential 9 top on the weekly, on the quarterly time frame, and on the yearly time frame, right? So there's a lot happening. Also, if you want additional support in terms of stock trading, well, we do have 2 sections in the whale room, right? For the whale room Discord members, make sure that you do go over there. Shorting the stock market yesterday, full profits over there from one of our traditional market traders. Here's the type of size and profits, $4,600 in profit for the day. So if you do want new opportunities, also that is linked below if you do want to get into whale room. All right, so let's continue, right? If you look at the M2 money supply, this has also been a great indicator, which at least the highest risk things within the crypto sector tend to follow quite closely, right? So if you look at Donnie over here, global M2 has been a leading indicator for risk assets like BTC. The hyper volatile meme tokens have trailed this indicator almost perfectly, right? If you look since ever since they became the dominant narrative of the cycle, hyper risk will respond very, very well to that M2 money supply, which you can see is slowly attempting to turn back up, right? So it's been coming down over the last period of time, but crypto tends to lag this. So this could be something to look forward to alongside the DXY, which I would now say the chances are much, much, much higher that this is actually going to break down, right? And that's what we wanted. This is what we spoke about for a long period of time. We spoke about the long-term trading range. Here it is, the long-term trading range, the deviation over the top side, while we started to put in a series of low time frame, lower lows and lower highs, breaking price back into the trading range. And this is starting to really look like a confirmed deviation. You're about to take out this low. That is the major level that the DXY bulls would have wanted to hold. And if this does break down, that could be good for crypto, barring one circumstance, right? There's always a possibility that things could go further down, and that would be barring this one circumstance. The one circumstance would be, remember, the DXY measures the dollar against a basket of other currencies around the world, which means if the DXY is going up, the dollar is deemed stronger than the risk of this basket, or than the rest of this basket of other currencies, right? So DXY goes up, risk assets go down. DXY goes down, risk assets like crypto and the stock market move up. However, there can be a scenario where you see everything selling off, right? And this would be very, very, very bad, right? If you do see risk assets going down, the DXY going down, and you have bonds going down, which we saw a little bit of that actually taking place yesterday on a very low time frame. If you were viewing the 5-minute time frame during the stock market correction, this is something that took place, and that can, in certain instances, be a major warning sign, because it means that money is leaving the US, right? If you don't have the stock market, usually it's going to be two go up and the other go down, right? The other one goes down. So what we want to see is we want to see the stock market and risk assets move up as we witness the DXY starting to break down. Now, this is again tying in a little bit with the bullish hopium case, which I'm going to outline to you today, something that I spotted on our live Zoom session with the 𝗲𝗚𝗡 members yesterday while we were trading live, and I'll get into that in a bit, right? So this ties in with that, right? If you do have this long-term accumulation phase, it's also known as a power of three, right? So you go through accumulation, manipulation over the top side, and then you lead into what's called expansion. Now you get a bullish and a bearish power of three. If you get the bearish power of three, this would probably drive that M2 money supply towards the upside, which I just covered over here, and that would create a risk on rally, allowing for the stock market as well as crypto to catch a bid. Right now, of course, there's smaller moving parts. This is more high time frame stuff, and this would play out over a couple of months, even possibly over the course of the entire year. And that would be your true bull run, right? That's what you guys are looking for. So we've seen one sign, right? One sign. This is a good thing for the bulls. Check mark one, right? What are the chances that it's that rare occurrence where bonds, the stock market, and the DXY are all three going down together, at which point it's an incredible warning sign? Well, very low. I would say the chances of that happening right now are very low, but it's still a possibility. That would be the one time that it doesn't work out, right? So we've seen the crypto fear and greed index jumping all around from 11 to 30, back down to 12 or 15, I think it was yesterday, now up to 20. So we're still hovering around within that area, attempting to put in higher highs and higher lows on this fear and greed index, if we were to plot this out on a chart, right? We've also seen that the 24-hour volume has diminished drastically because people are just sick of getting flushed out of the positions, right? In this kangaroo market, you're in, you're out, you're in, you're out. Before you know it, you've taken 2% loss, 2% loss, 2% loss. You lost 6% of your account. Then you've lost 10% of your account because you keep taking these 2% losses, right? Then people sit on the sidelines. Now, one thing I will tell you is that the true pros will be sitting on the sidelines throughout this entire period, right? We've seen multiple $1 billion worth of liquidations time and time again, and that's why they sit on the sidelines, right? Because you'll quickly get chopped up. Your account will draw down quicker than what you can believe, and consequently, you also don't have too much of an edge, right? We don't know what Trump is going to think or do today. Every day is something, right? They're going through an aggressive negotiation sort of tactic around the entire world, right? With global governments trying to get the best deal. He is literally implementing his book, The Art of the Deal. He's implementing that on a world scale, and that creates massive uncertainty and massive volatility. And we know that the markets absolutely despise this. So therefore, you have to be positioned where you're willing to miss some of the move, but rather get in at a confirmed higher price. So there's two options over here, right? Option one is you somebody that tries to buy the dip, right? You like to try and find the bottom every single time. You're catching a falling knife. Sometimes your hands will get cut, and other times you might catch the falling knife. That's point one, right? Some of you may want to do that. What it means is that you have a better risk to reward ratio because you have a closer invalidation point on the chart to understand, well, hey, if price just goes down one more time over here, I'm taking this % loss and I'm wrong. But you have a much lower success rate in doing that. You have to be prepared to get stopped out over and over and over again. The alternative is trend traders, right? Trend traders will be waiting for confirmation to get in higher. These are your two options, right? There's different people out there. You need to figure out what's going to work best for you, right? Do you want to be a knife catcher? Do you want to try get in at the absolute low, which means you have to be prepared. You're going to get stopped out. And then eventually you will catch the low, right? A better risk to reward ratio. Alternatively, trend traders will get the entry correct much earlier, or at least much more often than what the knife catchers will. But it means that they're going to be buying much higher, which means that the invalidations are much lower, which means they're taking on much more risk in entering the trade. But even though they're taking on more risk, they have the confirmation of a trend, which means that they have a theoretically less chance of being wrong on that entry, right? So this is the thing that you need to answer. So when it comes to the trends are down, right? Which therefore means that you should theoretically be out. But we have seen some signs that small things are starting to change, such as this, right? Despite the fear, despite the sentiment, this is something that we've tracked quite accurately. And the daily exchange volume does continue to move towards the upside. Now it's starting to reach that point where it could actually breach through this 92.14 billion. And, I don't know where the money keeps coming from, because these guys keep getting liquidated. You would have thought that by now they've run out of money. How do they keep depositing money onto exchanges, right? Because that's what this chart tracks. This tracks how much money is flowing onto the crypto exchanges, being deposited in order to, I guess, buy the dip, right? And to trade with. And it keeps going up, right? So we'll see if we can start to clear some of these key levels. Most notably, if we can get into about $100 billion mark, that will be our first sign of putting in that higher high. And then for trend traders, the next move down on the volume over here that puts in a high low, that becomes a good indication. But also on the side of caution, a trend trader would theoretically, if you could draw a downsloping trend line over here running through all these previous lower highs, well, you'd be right at that juncture right now where you should be putting in a lower high, and then you can line that up with the prices, right, with the price charts. Now, currently, this is really fighting very, very hard, tooth and nail, to try and defend the 21 weekly exponential moving average. And I would say that if bulls can somehow do this by the end of the week, which is possible, who knows what sort of, fabulous information they might leak from the crypto summit, which is coming up on Friday. If there is something, that builds up interest and momentum, and you can close another weekly candle like we did last week in miraculous fashion above the 21 weekly exponential moving average, that would be a positive sign. I also want to outline some of your worst case scenarios, which you're going to see are going to line up in a moment with the other chart. Right now, let's say, for example, it doesn't, and you continue to drop down. Well, of course, you do have this trend line over here, right? Long-term trend line coming into key horizontal support. This was your prior all-time highs, which we spent a lot of time trying to break out. Now we've broken out of that. Maybe in a worst-case scenario, you come back and test some of this, and then that becomes the ultimate buy the dip bottom opportunity, right? Again, as per your trends are really starting to roll over. This is high time frame. It's a 5-day chart. You are below the 3, the 9, and the 30 moving average, and you got your 3 and your 9 moving average angled towards the downside. And if you spend more time underneath here, following this rejection as well, you will start to see the purple one, which is your 30, roll over. And that becomes what your investors would be looking at as an exit signal, right? That's a full-on exit signal at that point. So again, different people, right? Short-term traders, they want to buy the exact bottom. They're probably focusing on the range. You got, medium time frame traders, which are swing traders. They position size traders, and then you get the long-time investors. So investors, these guys are starting to obviously pull their hair a little bit, right? Bite their nails a little bit, starting to prepare that if this does roll over, they may start to exit. All right. I guess some of the trend traders would also be looking at this, and what you'd be focusing on is extremely choppy behavior, right? Price finding support again yesterday at the 200-day moving average. The light blue one is the 200 EMA, still managing to close above that. But we went into this massive Trump pump, immediately faded with pretty much a bearish engulfing candle, somehow managed to close over there. Maybe you want to call this a bit of a higher low attempt, right? A bit of a higher low attempt. So for the knife catchers, I guess what you're going to be looking for is you're probably going to be looking to catch the knife over here. If you get lucky enough to see a wick come down towards 50% of yesterday's wick low, so measure 50%, which is going to be pretty much exactly at the yellow. That is 84,162. That's probably where they're going to look to enter. And then you have a tight invalidation underneath this wick low, right? Yesterday's wick low. That is your stop. This is what I'm talking about when I say that if you want to be aggressive, this is probably where you're looking to be aggressive. But being aggressive means that you have a high risk that you will get stopped out. You're going to get stopped out much, much, much more than others, right? For example, they may have bought over here with an invalidation underneath and stopped, right? Then they may have tried again, for example, over here at the midpoint of this big candle and stopped out, right? Now they may be trying again over here, and if price does that, stopped out again. But eventually they'll get the move, and they're taking on less risk than those that are going to wait for confirmation of higher prices. So for those waiting, you need to get above those breakdown candles, which would also simultaneously break that trend line. So there it is. In better view, this is what you're looking for if you're somebody waiting for the confirmation, right? Waiting for the confirmation, you want to see price smack all the way up over here, break this trend line, the yellow line, get back above the yearly open, hold multiple candles over there. But now your invalidation or your control of your risk is much lower, because you would have to invalidate all the way down here and you're entering up here, right? But you have confirmation at that point that you've put in a high and you've broken the downsloping trend line, right? So it's more probable that this will continue towards the upside, and you've at that point put in a major bottom. So 2 frames of thought, right? The alternative is also, if you do reject from here and you come back down, remember, you do still have this daily fair value gap, right? This is the one that has been untagged at 72,510. And this is where we said anyone that did snipe this exact entry, which we actually did live on the show on Friday, you can go back to that show. We said this is exactly on the orange line where those guys logically would have placed their stop losses, right? Okay, so a lot to cover. I know there's a lot of moving parts, and this is what's making it really complicated in the market, because I can make the argument for both sides, right? I can make the argument that, you know, this could very well be a major, major low, but then I can also make the argument that the trend is your friend till the end of the trend, and you don't want to counter trade that trend. And that trend is down, right? But you can see the beautiful looking wicks over here that are starting to form, showing that there has been some real demand that's kicked in with that volume rising towards the upside. So we'll see what it's made of if it can close above 100 billion on the volume chart and then come in to print a higher low. That will be a relatively good sign, right? All right, so this is what we're looking at. Otherwise, if you do reject, you know, again, 72,000, that's going to be your fair value gap. It lines up with the volume support on the lower end over here. And then the same story, if you're waiting for the confirmation of the reversal, getting back above the yearly open simultaneously would mean getting back above the high volume profile and your point of control, right? So if you get above this point of control, $97,000, that's going to be looking good for saying that that was the bottom and we're ready to run it back turbo, right? Back towards the upside. Okay, so low time frame, the lowest time frame I'll really look at is between the hourly and the 4 hours. So on your 4 hour time frame, still riding these EMAs down, right? Keeps rejecting off the 200 every time, holding that price towards the downside. Now, the one thing that I found, right? I know that, of course, the crypto banter team that write the titles and the thumbnails sometimes are a little bit overzealous, right? I know where crypto will bottom. Mark my words. Mark my words. The truth is that crypto will bottom, and you're going to love this answer, right? Crypto, this is when crypto bottoms. Crypto will bottom when there are more buyers than sellers. That is the answer. Crypto bottoms when there's more buyers than sellers, right? However, one thing that I'm paying attention to is this, right? If you look at the open interest on the chart over here, that's pretty much driven this entire move up, right? This has driven this entire move up. We have seen a full reset, which is a good sign, right? It's come all the way back down into this box over here. And each of these tests into the box over here did get very, very close to marking a major low, right? If you look over here, marked a major low. There we go. That was the major low. Price ran up. And now you've eventually done a full reset on the open interest, which shows you that leverage has essentially been flushed, right? It's been fully flushed out of the market at this point. The other thing that you can line that up with is if you focus on the very small little red bars running towards the downside. What this refers to is the aggregate funding rate percentage. It shows you how many traders, or is the majority of traders long, or is the majority of traders short? When you see the little red bars underneath, it shows you that people are trying to short the market, and they're trying to short the market into support, right? With a reset in the open interest. There it is. And that is where you're finding your major bottoms, right? There it is, major bottom. So sometimes you only get one little bar. Sometimes you spend a little bit more time there because there's more fear. Whether we're going to have just this 1 or 2 bars, and I'll zoom in, you know, whether that's it, is that all that we're going to get? Or is this going to come back down? That I'm uncertain of, right? I'm obviously unable to tell you this. However, we can look at the various other data points like the stock market. I guess if the stock market does lose this and do something like that, that's probably going to lead to a little bit more fear as well within the crypto market, at which point you may come down to those lower levels, right? You may see something like this. Now, this is one of the signals that we're looking for. The reset in the open interest, we've got it. That's a tick mark, right? The next thing, we want to see negative funding. We got the negative funding, but it could go a little bit lower, right? Now, this is the interesting part, like how greedy are you going to be on the entry, right? If you want to be very, very greedy on the entry, you have to accept that you may be having to buy higher, which means you're defaulting to the confirmation of an uptrend again, versus essentially buying the exact bottom. If you want to buy the bottom with high confidence, I would say it would look something like this, a retest, you know, back into this trend line. I know that would be incredibly scary. We wouldn't want to see daily or weekly closes anywhere down there. But if you did see something like this, a massive scare, shoots down into this lower region, which means it would have to drop below $70,000, a couple of candles down into $66,000, $67,000. I think I will blindly buy that. If that happens, I'll blindly buy that with the expectation that somehow something magical is going to happen and it's going to close back, higher. As a swing failure pattern. Remember, what is a swing failure pattern? A swing failure pattern is when you're looking at a line on the chart like that, right? That is your, for example, your support level, and price drops the support level, loses it temporarily, but then immediately reclaims. That reclaim we call a deviation or a swing failure pattern. So therefore, I would love as a greedy bull that wants to get the perfect entry, I would love to see somehow prices fall one more time into the 70s, the low 70s, possibly you come down into that next daily fair value gap, this one over here at 72,000 with 1 or 2 wicks that run through, right? So maybe you see something like this, right? Another rejection, increased fear leading into next week, smash through. So maybe not that low, but smash through into like the 60s, reclaim swing failure pattern with closing candles happening above $72,000. And that's it, right? That was the bottom. I would love to see that. Whether we're going to get that, I don't know, right? I don't know if we're going to get that. So you're faced with 2 options. One, either, you wait for something like that, scenario 1, or 2, you wait for scenario 2, which is the reclaim of these, at which point you have a much safer entry. Or 3, you're a complete degen and you just enter right over here with a stop loss below there. I don't know. The choice is yours, right? The choice is yours. So those are the options. Those are the opportunities. That's what I'm looking at. I'm closely watching over here what happens on the USDT dominance. It is holding in this low time frame range on the 4-hour chart, right around that mid-range level. I'm curious to see, is this going to take a move towards the downside? If it does, of course, crypto is going to move up, or is it going to put in a higher low over here, holding the mid-range as support and then rallying for the highs over here? If it does rally for the highs, I guess you can also work out a measured move off of this low time frame range like this. So looking at the range breakout, if you do get the confirmation of the breakout, well, where will that take you? Interestingly enough, that will take you exactly into the downsloping trend line. And that was kind of my worst case scenario, right? So in a worst case scenario, you need this range to break out on USDT dominance, send it up to about 6.3% into the major resistance, at which point you probably do this type of a breakdown. You get negative funding. You've had the open interest reset, and then that becomes the opportunity to get back in with a great long trade, right? So that's where I'd be looking to flip long. Right now, Bitcoin dominance is also as volatile and absolutely ludicrous as what the rest of the market is, chopping you in and out, bullish engulfing, bearish engulfing, it's up, it's down, it's left, it's right, it's all over the place. It is holding the 9 and 18 exponential right here, right? So it's attempting to hold that. That spike could get that final test into the 50% of the wick over there. And then maybe you see some sort of transition and rotation from Bitcoin into altcoins, right? I don't know yet. We take it one step at a time. That's important. Be here each and every single day. Vote as well in the poll. We are running a poll over here. What comes first for Bitcoin? Let me know. Is it $72,000 or $100,000 Bitcoin? What do you guys think? Go through to the poll. We got almost 2,000 of you that have voted. If you haven't voted, please vote. Also, let me know in the comments over here. What is your thoughts, right? What is your thoughts? Let's click. I'm going to see 58% of you believe 72,000 would be coming first, right? Only time will tell. Only time will tell. So I am still bullish on the same types of projects that I previously was. If we do get that type of a move down, things I'm interested in picking up. Look, it depends. If Solana sweeps down into about $100, I may be interested in picking some up over there. The reclaim of 120 would be that swing failure pattern. I'll be looking at SUI as well. I have interest in picking up some SUI. Sonic is the other one, I guess, the SSS, right? SUI, Sonic, Solana, those are kind of the ones that I'll be keeping an eye on. If you do want to trade these alongside me, right, there's a link below to Blowfin. They give you $150 if you do sign up and make a deposit. That's a future bonus deposit. And they're giving you a discount on your fees, right? Up to 50% of your fees come straight back to you in the form of USDT. So no KYC required, right? That's the most important part for Blowfin. So use the link over there if you do want to join in. Now, again, looking at the total cryptocurrency market cap, look, it would do something similar if Bitcoin did get that move down, and it's going to be an interesting week keep your finger on the pulse. I know this market's weighing you down, but stay vigilant, right? This is where the most money is made. In this type of environment, you need to get the entry. So stay focused, stay tuned, jump into Whale Room if you do want more. Of course, I am updating each and every single thing. Like, for example, the moment that I found this, I did share this in Whale Room, right? I'm your hopium dealer. If you need more dealing, it happens in Whale Room, right? Okay, so total, right? The total cryptocurrency market cap at that point would probably drop easily down to about 2.25 trillion. Your confirmation that things are changing is getting back above, not this week's high, but last week's high. If you get above last week's high, 3.16 trillion, then that starts to be where you can say that, you know, maybe this is confirming as a major low. And you could easily see it happening, right? It's been a pretty brutal shakeout, but you could see something like that taking place just visually. If you picture that on the chart, you know, you got major low, last major low, and then I think that that leads into the final phase of the bull run, right? So a lot going on over here within the markets. Let's see, you know, Solana still choppy all over the place. I mean, these charts suck, guys. This is not a trend trader's market at the moment. If you want to be a trend trader, it's not the market for you. Look at that, SUI straight down. You know, SUI is probably coming for these lows. So if Bitcoin does have that move down and SUI gets a drop like, it's another 20%, right? 20% down over there. I'll be watching for the reaction. I use Bitcoin specifically as the proxy, as the index to see what happens next, right? So I'll be watching Bitcoin specifically. If Bitcoin finds those key supports, basically doesn't even matter what any of these other charts look like. If Bitcoin bounces, these things bounce more, right? Okay, hype still coming down. Look, there was demand that kicked in over there. I'll give it a bit of time. Strength comes back into the market if this can get back above 20. Sonic, right? Sonic over there. Also finding a little bit of support. You know, it got to a super dangerous level. You can see over here, there's a bit of support over there. It managed to close back above. So that's at least a good sign. What else do we have in terms of the list? So we covered Solana, SUI. Let's just drop that back into the L1 section. So Solana, SUI, Sonic, hype. Maybe I'll pick up a bit of hype as well if we do get a move like that. Get your accounts ready. That's all that you can do, right? Get your accounts ready. Have them prepped. Don't lose too much hope yet. Because if we do continue this trend towards the downside, you know, you have to ask yourself, where are we? Where are we on the Wall Street cheat sheet? Where do you guys believe we are, right? Now, this is the only problem, is that I do think that people resonate more with what's going on over here. A couple of weeks ago, it was that denial, right? I'm sure you guys all heard it, right? Investments are with great companies. They'll come back. Don't worry. As long as you move to strength, you'll be fine. This is stuff that you tend to hear, right? Then we had a little bit early on this week, right? Panic, right? Shit, everyone's selling. I need to get out. I'm sure that resonates with you. Capitulation, I'm getting 100% out of the market. I can't afford to lose any more. That's kind of anywhere between panic and capitulation, right? Anger, who shorted the market? Why did the government allow this to happen? How dare Trump and his family launch meme coins, right? It's their fault. I can still see some of this coming. Depression, my retirement money is lost. How can we pay for all of this stuff? I'm an idiot. So that's what you need to ask yourself is, where are we? Where are we? Where are you? Let me know in the comments. Where are you? I see Billy Collins says anger. Where are you guys? Let me know. Where on this list do you feel emotionally? Read the list and drop it in the comments over there. Lazarus says euphoria is coming. Well, if it's Lazarus, it's probably because Lazarus is the group that hacked Bybit. So you are euphoric, right? You just got yourself 1.4 billion. Okay. All of the above. Mike Boxy's all of the above. Depression. Some of you in denial. Yeah, look, this is an interesting thought process that you have to run through. Now, also what I want to say about this, right, is you can have multiple of these within a broader cycle. It's not to say that, you know, that if we're over here in panic, that we have to go through a multi-year bear market. That's not necessarily the case, right? You can go through like micro emotional cycles within a broader macro play. So you can be, for example, you can be theoretically somewhere in this belief phase, optimism belief phase on the macro, but on the micro scale, you could get heavily wrecked and feel that you're in the panic anger phase. Okay. All right. What else? What else have we got, guys? Let's see if there's anything else to go through. So I know some of you very, very stressed, you know, just chill, relax, let the market show you what it wants to do next. you need to be in capital preservation mode, right? Now is not, if you're highly risky, if you're very wealthy and you have a lot of capital that constantly flows in through businesses, etc., fine. Probably for you, it's the time you can start to put some risk on the table because you can afford that. But if you are, not able to do that, if you don't have hordes of new finances that are constantly flowing in, it's wealth preservation mode. I can tell you any of the major funds out there are probably any of the good ones that beat the S&P 500. They'll probably be sitting on the sidelines rather waiting for confirmation for the trade wars and things like that to cool off, because this creates uncertainty. And if there is uncertainty and confusion and things like that in the market, which is how I know a lot of you feel, then you lose your edge, right? It takes away the technical edge that we have as traders. So that's that. Again, trying to help you guys out any way that we can in terms of, sign up deposit bonuses. I'm trying to get more and more for you from these exchanges. So if you do want to jump in and join, again, Blowfin 50% off. BTCC, if you want to take that Coinbase trade, you are getting $175 for free by using the link in the description below. And then all the alpha and the jokes and everything is going to be in Whale Room, right? So as I mentioned to you over here, everything is in Whale Room. If you want extra hopium, jump in there. That's it from me, folks. I'll see you all on the next one. Hope you have a lovely, lovely day, and we will see you tomorrow. Cheers for now.